I'm going to talk about in this video asset-based financing. I'm assuming that you've got some assets to leverage. So in this video, I'm going to talk about some of the different asset-backed options that are out there on the market today, the benefits of them, but also things that you should consider and maybe watch out for before putting up that collateral and borrowing money. So stay tuned. All right, so thanks for tuning in to Grow by Joe. There are so many different lending options out there, and it can be really confusing, and that's exactly why I started my channel, to help business owners and entrepreneurs like you understand what options are out there and how to use financing as a tool to grow. If you're watching this video, I'm assuming you have some sort of asset. So assets can be looked at in a number of different ways, and banks and non-bank lenders, when they're lending to businesses, they look at like 3 or 4 different types of core type of assets. The obvious is real estate. If you've got some real estate, commercial or residential. The second is like heavy machinery and equipment. The third is B2B receivables. So if you're selling goods and products through other businesses and big brand names, you can leverage those receivables and they actually are considered assets. And then inventory. So sellable, resellable inventory, you can leverage that inventory as an asset. And there are different products on the market today. So the obvious is real estate. If you've got some real estate, you should be able to go to really any commercial bank if you've got great real estate with a ton of equity and easily refinance that real estate. Now, the only reason that may be an issue is your financials don't look good, or maybe going through a tough period in your business and it's not as profitable. Then there are some private non-bank lenders out there that will really just focus on the collateral of that real estate and just getting comfortable that you can repay it and really want to understand what the exit plan is. So I'm going to borrow money, I'm going to do this, this, and this, and then I'll be able to pay it back in 12 or 24 months. So they're really going to want to understand that opportunity. The other thing is, if you're looking to purchase equipment, you don't want to use a line of credit or a term loan product. You want to work with a specific equipment lender that will just file a lien against that equipment so you can leave your business open to still use a line of credit or other lending products to grow and scale your business. That's really, really important. If you've got big machinery, equipment, especially yellow iron, manufacturing equipment, stationary equipment, or vehicles that are titled, there are lenders out there that will refinance that equipment. It is harder to get that refinancing done, and you have to take into account that what you think the value is worth and what the lender thinks it's worth will be 2 different things. And usually most lenders are going to look at liquidation value. So you're probably going to get about 50 to 70% on the dollar for what that equipment would sell on the market. If you've got $1 million worth of equipment, they'll probably look at the value of that equipment to be, $700,000 to $800,000, and then probably give you 50 to 70% of that number. So just keep that in mind. And that's the way most lenders operate there. And then separately, if you've got inventory, there are standalone lenders where you can leverage that inventory, you can refinance that inventory, pull cash out against that inventory to get a line of credit against it to grow and scale your business. Outside of that are your B2B receivables. Those are considered assets, and there's a number of banks and non-bank lenders that you can leverage this stuff very easily, get great rates, and do like a revolving line of credit against those B2B receivables. Now, the benefits of a lot of asset-backed financing deals are usually they come when there's high-quality assets, B2B receivables, inventory, and then especially if you throw real estate or really high-quality machinery into the mix, there's a lot of asset-based lenders that will give you very favorable terms and the closest to bank-like terms that are out there. Usually in today's market, much better and easier to work with a non-bank asset-based lender or an ABL lender. These lenders work much quicker, much easier, don't have all the red tape of banks. They're more entrepreneurial. They can grow and scale as your business grows. But if you have that high quality stuff, it's also putting a bank in the mix and just seeing what they can bring to the table. Just expect it's going to be a longer process. And more importantly, as you grow and scale, will a bank restrict you where you might pay a little bit more with a non-bank asset-based lender, but they can grow and scale much quicker. Now, the things that you want to watch out for with asset-based lenders is, one, they may have covenants in their lending agreements. So banks and non-bank asset-based lenders will have covenants. Covenants are basically rules and guidelines to borrowing money. You may have to maintain a certain amount of profitability in your business. You may have to keep X amount of cash in your business. You may, if you distribute a certain amount of cash, pay the lender back down. There could be different rules and covenants in your loan agreement, so you want to make sure you have that reviewed by an attorney. If the bank says you have to have a certain amount of profitability and you don't hit that profitability, or the bank may say you have to supply your financials monthly or quarterly and you aren't able to do so, you can pop a covenant that can put you in a tough place and they can call the loan. Or do other type of things. So you really want to make sure that you understand the rules and covenants when you're working with an asset-based lender. Extremely important. Separately, there's a lot of non-bank lenders that are out there today that you may be able to access the same amount of capital or more capital without having to put your assets up as collateral, and you can keep them out of the mix. I've seen deals out there where, in today's environment, they might be using their assets, but they might be able to not use their assets and pay a few points higher, but not have to tie all that other stuff in collateral in, and you can keep that collateral open for maybe down the road, or if you need further money, if there was ever an issue or an opportunity in your business where you've got that collateral leverage in the future. So you want to really explore an asset-based and a non-asset-based product, and then do the math and do the numbers. It may make sense to pay a little bit more and not give up the collateral. And keep those assets to the side for a rainy day, or just out of the mix. Also keep in mind when doing real estate deals, when you refinance real estate, there's closing costs, there's title, there's mortgage tax, there's appraisals, there's inspections. There's a lot of things that go into that stuff where it might actually make sense to pay a little bit more, move faster, and not use an asset-based lender. And then lastly, as I've mentioned, you are putting these assets up as collateral. So you just make sure the deal that you're doing makes sense, you can support it, you can service it, and you can take on that debt. Because you're giving up assets as collateral. If something goes wrong, the lender does have those assets as collateral, and if you can't repay, they can take those assets from you and your business. So to recap, there are a number of asset-based lending products on the market today. You can use your B2B receivables, you can use inventory, you can use real estate, you can use machinery. Asset-based lenders usually will have better terms, and the non-bank ABL lenders will have terms that are very close and very bank-like. The downfall is you're putting up collateral, and the lender has that as collateral. You want to make sure you know the guidelines and the covenants around borrowing money, and you want to make sure that you check the non-asset-based options that are out there today and compare the two, because a lot of the non-asset-based products are getting pretty close to the asset-backed products. So it's definitely something you want to consider and look into before you make a decision. I know I threw a lot at you. I appreciate you listening to this video all the way to the end. If you've got further questions, you want to explore this more, you want to know what the different rates are that are out there. The rates are currently changing, especially in the environment that we're in today. The guidelines are changing. The collateral types that lenders like and don't like, that's constantly changing. So check out the link below. You can get connected with my team, and they'll be happy to talk through your opportunity, what you're looking to get accomplished into your business, and can explain the different lending products, costs and terms, and everything that you may qualify for. All right? Thanks for tuning in to Grow by Joe. Keep growing your business, and please make sure to like and subscribe to my videos. See you soon.